Good morning to all traders and welcome to this Wednesday's Market Insights video provided to you by Orbex. This is here. Today we're going to have a look at metals and energies, gold, silver, oil, and also natural gas. We've seen gold reacting to the continuous risk on sentiment and having a drop to around the 1800s yesterday as the rally continues for a second day. As we said, Monday and Tuesday also have had very good news on coronavirus vaccinations. That seems to continue with AstraZeneca. Right now, there will be three companies so far, at least, that they're going to provide a successful vaccination. On top of that, we've had news of a somewhat smoother transition to the White House now for the president-elect, and at the same time, reports that he's going to bring Yellen back as Treasury Secretary. And as we know, Yellen is dove. So markets seem that to have cheered this event, as I mentioned yesterday as well. Now, on the other side, we also got a risk is on. So oil is moving higher as well. We've had a very good API report yesterday, but the oil price is stalled at some point, which is expected, of course, after a rally of like 1 to 3 months, if I'm not mistaken, actually March. Haven't seen these levels around 43 since March, 43.75 if not mistaken. We'll have a look in a minute. But I'm not really confident that this rally is going to continue much higher or for much longer, because don't forget, with Biden, who's a green energy pro, I don't think that this rally is going to extend much longer. Also, there is talks around the banning of fracking as well. When of course he takes place on the 20th of January. So I'll be cautious about the oil rally as well. Right now on gold, let's have a quick look. We looked at, actually last week we talked about this wave Y, right? We talked about prices moving down in an ABC formation. We thought we're going to end a bit higher, to be honest. I talked about the 1817, right? Because this is a previous wave 1 in the minor degree. Now, obviously, we broke that level, we're past that level. I'm looking at the 78.6 Fibonacci extension of waves W and X. This is around the 1785. It could be where we might start seeing signals for the upside, but then I would be expecting another move to the downside to around the 1766, which is previous wave 1, right? In order to consider this still as an impulse, which means we are going to have another move to the upside to end this wave 5, right? Now, with that signal, I will be expecting also to see the MACD creating some sort of a bearish hidden divergence and the RSI as well, right? In order to consider this as an impulse to the upside, or it could be a standard signal as well. Now, in case we break below 1766, right, then most likely we ended this move to the upside. And what is going to happen, that's going to turn into 1, 2, 3, 4, and 5 for wave 1. Then this is going to be a wave 2, yeah? And this is going to be a wave 3, because this is 1, 2, we're going to see 3, 4, and 5, right? So we're definitely looking for more downside if we break the 1766. Now, let's have a quick look on oil as well. We talked about that last week, right? We talked about this perhaps being a WXY over here for wave B, and then we're expecting another move to the upside. Now, I'm looking this to end, well, anywhere between 60 and 50. I know it's a big range, but it really depends on how the oil industry is going to start picking, because of course we've got, you know, China really the biggest importer, importing quite well because the economy is doing very well, and other economies are following now as well. But as I said, the impact from a potential change in policy and regulation in the oil markets due to the Biden presidency is probably going to cause this wave 5, as I've been expecting for a while now, to weigh on the prices of oil. Now, these price marks I have put here, the 50, the 55, and the 60, are the 38.50 and 61.8 respectively Fibonacci extension of waves A and B, right? Also, near the 60 level is the trend line connecting waves. So this is wave 2 and the beginning of wave 1, right? Because do not forget, still see this as a 1, 2, 3, 4, and 5 down here, right? This is 5. Is 1, 2, 3, 4, 5, yeah, all ABCs, right? So this is an ending diagonal, yeah, do not forget. So I'm expecting another ABC the moment we get a signal here that this is indeed going to reverse. Now let's have a quick look on silver and then a quick look on natural gas. Silver as well, similarly to gold, we talked about this last week and it's coming through. We talked about this potential move to the upside. I was expecting something more, to be honest, but it doesn't matter. We still got that down. So this is an A, B, and it looks like a C. With to me, this is 1, 2. This is wave 3, 4, and we're gonna see a 5, perhaps near the 20 level. Okay, there is of course more space for this to go a little bit further lower. Let's have a quick look. And that is going to be, well, if we take wave 1 into consideration, then it's going to potentially even be down to the 15 or so, right? But I doubt that's going to be the case. Perhaps if we break the 20, then we are going to look at the 1850 or so next, which is the 61.8 Fibonacci retracement of wave 1. And last but not least, natural gas. We talked about this, I think, last week too. Or if not, it was the week before. 1, 2, 3, 4, and I was looking for an upside here, right? The thing is, you know, it could be either an ABC or it could turn out to be a W, X, and Y, right? So as long as we remain within this sort of channel, yeah, I can expect further downside to the 228 or so and then continue higher. Because the truth is, I don't see any signals on the RSI or MACD at the moment to support either downside or an upside move. For that, well, when that happens, that it means that markets are likely to continue with their short to medium term trend, which is in that case bearish, okay, from the $3 top. Thank you for watching and we'll speak again tomorrow.